Good morning. We will pay attention to adjustments today and to show how an error is corrected. If we look at the trial balance, the balance in the inventory account is 44,370. So this balance was obtained from the inventory account. This 44,300 was determined after all the entries were completed. So it means that they showed all the purchases, sales, cost of sales when goods were sold, when goods were returned, and then at the end of the year, they determined that the balance is 44,370. A consumable stores purchase at 430 was recorded as merchandise, as inventory. Now remember, the entries that's recorded in your inventory account is goods that you buy with the purpose of selling again. Consumable stores are purchased to use in the business. So this is a mistake. It should not be in your inventory account. So we must take it out of our inventory account. Because it was recorded on the debit side, we will take it out on the credit side. Therefore, the inventory account will be credited with the 430 and consumable stores expense will be debited with 430. In the general journal, we will also record that the consumable stores account is debited and that the inventory account is credited. So remember, anything that you record in the general journal will always be exactly the same as what you do in the ledger account. If I debit consumable stores, then it means I will debit it in the general journal. If I credit the inventory account, then I will credit it in the general journal. Then to the profit and loss, we will show the expense of 430 in my consumable stores account. In the inventory account, after I've taken the 430 out, I will calculate the new balance, and this 43,940 will go to the balance sheet as a current asset. So what did we learn today? If a mistake was made, a correction must be completed. An entry must be completed in the account where it was supposed to be. So you must go and complete it in the consumable stores account because that is where it was supposed to be. Then an entry must be completed in the account where a mistake was made to correct the mistake. So because we made a mistake in the inventory account, I have to go and take it out on the credit side of the inventory account.